Hello, everyone. Happy Sunday. How we all doing today? Get audio check here on my end. We'll get right to it. Happy Sunday. How we all doing? Alrighty, we're good to go. Well, let's start it off with this. Well, well. What do we find ourselves in here worldwide, huh? Crazy times, crazy times. Of course, not laughing at the loss of life and what's happening worldwide, but it is funny how predictable all this shit is, and it's going right to script, baby. Who's script? Those that know what the fuck's going on. Let's get into it, guys. Hope you're all doing fantastic. Pull up the chat here. Williams, afternoon, sir. Any chance we could have a link to the Notion journal as shown in the recent video? Yeah, man, I'd like to do that. That's something I make available for those I'm coaching so that you have a template that you can use for your journal logs. That's one of the big things that streamlines that learning process. For those that work with me is knowing how to journal and have a really simple way to do that each day. But I did decide to make that available for you guys. So my actual back testing system that I've developed over these years, I actually generously shared that for free on YouTube. But I decided to even take that one step further and share the Notion template and how I kind of set that up. So that's something I'd be more than happy to do. Maybe that'll be the next video. Kind of thinking of doing one technical and then one around journaling, psychology, and just rotate it 1 week chart based and then 1 week something else. And once I get done with the actual mentorship content I'm doing for those that I have an obligation to, then I'll potentially look to start doing maybe 2 to even 3 videos a week on the YouTube. So let me know how you guys like that recent video. Some feedback would be greatly appreciated. And if it was helpful, let me know. And I'm looking forward to doing much more for you guys on YouTube. Going forward, that's something I'm going to be making a point to do here consistently. So every single week you guys can expect something from me on YouTube. And then once I get done with all the months and months of mentorship content that I'm doing with those I'm actually working with, then I'll actually be able to really hit the gas on YouTube and start putting out 2 to 3 videos a week, hopefully. So let me know what you guys want to see. Give me some ideas. I'm taking in the feedback. Touched on opening prices. I believe when you guys were asking about opening prices, so touched on that in the recent video. So your guys' feedback, ideas, things you guys want to see helps me out greatly. So I can put out some things that are going to make the difference for you guys. Silver Bullet, Amy, hello. Michael, hello, sir. Pro, hey, hope you're doing good. Samad, my man, trust you're doing great as well, sir. Aslam, Joe, glad to have you guys. All right, guys, so let's go and get right down to it. So as we know, shit's getting wild here worldwide. Going to script, to be expected, and it's just going to pick up from here. I've been called Chicken Little before, that's funny, you know how it goes. But the thing about it is the conspiracy folks are actually really just ahead of the curve, and it's just too early for most people. But what we're seeing right now is to be expected. Next thing you can expect is Russia, excuse me, Russia and China to get involved next. And then they're going to, of course, back Iran and then North Korea. And then that's going to really kick everything up into high gear. So with that in mind, nothing to be fearful about, nothing to be scared of. But as traders, as investors, it's very important to know what's going on, right? Imagine holding a short position on crude oil. Right? Not very good if you don't know what the hell is going on, right? So with that in mind, guys, let's go and break down what we're looking at here for today. A lot of crazy shit going on. So let's unpack it. We'll start with dollar, bonds, indices, and I'll take a look at crude oil, gold, and we'll be on top of it as usual. And any questions for me, more than happy to take your guys' lovely questions as we go throughout this presentation here. Hey, Frank, what's going on, sir? Amy, still watching yesterday's video? Great so far. Awesome, Amy. Thank you very much for the feedback. Really appreciate it, guys. And again, any additional videos, other things you guys would like to see, let me know. Always open to new ideas for some videos. So let's go and get into it, guys. Let's start with the US dollar here. So starting from the weekly chart here. Crude oil bears, man. Hating life right now. It's all right. Hopefully they're watching our YouTube. All right, guys, so weekly chart for US dollar. Longer term, we have been bearish this market, just calling lower prices simply because we've been in a long-term sell model here. I haven't been trying to call a bottom in that. However, do keep in mind that going forward, we could see an abrupt shift in what we've been seeing in terms of the recent order flow with the US dollar, simply because the escalation of war worldwide is going to, just had to think for a second there because I'm saying all these words. The algorithm on YouTube is going to flag me, so I got to be careful for what I say here. So the World War III is picking up. So what that will likely do for the US dollar is inspire that safe haven investment, which again, I've already covered this before, but for those of you guys that are new, When uncertainty arises, money seeks safety, right? Wealth, deep pockets, people with real money, they want to put that money in safety, right? And that's generally been viewed as the US dollar has been that safe haven asset because it's been relatively stable for the past 80 some years. So with that in mind, we could see a reversal of what we've been seeing. So what I'm watching here for dollar is going to be the run below this low here and how we trade there. So we've been calling this thing lower, nailing it to the wall. We looked at that wick 50% and then the sell side just below that. And I wanted to see if we could accelerate down through that low and run into these targets here last week. We did not see that though. We swept below that low once more and then we immediately traded higher back into the range. And again, that could be because the escalations that we're seeing in the Middle East. So saying that with the intention of wanting to warn you guys that we could see an abrupt shift in what we're seeing in dollar. And right now, don't put too much weight in what I'm saying. I'm just sharing what I'm weighing out with the present market structure. We will likely see a major gap opening come Sunday, and we may be very far away from where we closed. So these levels I'm giving may not even be relevant come Sunday open, but what I am watching is how we trade below that low. Because if we reject this low back to the upside, shift order flow, then that could turn the markets bullish. Working down into the daily chart here, we're watching this gap here, see if we could continue selling off. What I'm going to see here is how we open on Sunday, because like I said, we closed here inside that gap, but we could see a really far opening from where we closed. So if we open much higher, which I'm suspecting we'll see a gap higher, then if this gap is left open as an inversion gap here, then my attention goes to these equal highs here, this high here, and then buy side back here if we see some speed on the upside, which again, with escalation on the war front, that's likely to be a factor that continues. Hourly chart here, these equal highs here have my interest, but like I said, based off where we gap, this could all be irrelevant because we could just gap open above all these levels here, right? We could like just gap open up here. So I like these equal highs here, relatively equal for the market to run up into that after taking out that major sell side down here. But again, we'll have to see how we open on Sunday. Going into the bond market now, let's go up to the monthly chart. All right, so monthly chart, we've been talking about bonds for a lot this year, and the main focus has been the consolidation profile we've been in, right? Consolidation meaning we're inside of a range high, a range low, and we're just gyrating around inside that range. That's what we call a consolidation market profile. In consolidation profiles, the markets are much more difficult because they're just simply not expanding. It's not running for liquidity pools on the higher time frame. So it is going to be much more difficult, as you can see as we drop down into the weekly chart, right? Look at this, right? This looks like a market you never ever want to trade, right? Just with all the back and forth banging around inside the range. So we can see here we've really tightened up this consolidation range here. We're really compressed. And I do believe that the catalyst that we've seen this weekend, or what we've seen this weekend, will serve as a catalyst for these markets to move out of consolidation. Because again, we've been consolidating for a long time. And after consolidation, we get expansion. But expansion is going to be brought about by certain events, right? So same thing is going to go for S&P and NASDAQ when we get into that. Daily chart, there's not much for me to cover. As you guys know, we've been watching this breaker here for the longest time. But that's the thing in a consolidation profile, right? You're used to seeing a breaker block, we'll call it out, it'll trade up into it, hit it, sink, and sell off. But in a consolidation profile, that's just not as likely to deliver clean how you want to see it. So you have to take that with a grain of salt. So we're still in that long-term consolidation if we scrub back here on the daily chart. So we're still inside this long-term range. I do suspect that we will break out of this consolidation given what we're seeing on the geopolitical front. That's it for bonds. We're still in this consolidation. I'm interested to see what they do. When markets are consolidated like this, I have a rule. I don't try to gamble inside of a consolidation. I just let it expand and break out of that range, and then that's going to give me the insight I need. And I don't want you to think I'm trading breakouts, right? I'm not going to short the break below the low or long the break above the high. That's not how we trade. I just want to see the market leave that range. And then once we leave the range, that'll give us a great deal of insight as to what we should be doing, what we should be expecting going forward. All right, so that's the business on bonds here. Let's keep it moving forward. Let's go right to NASDAQ. Let's go up to the weekly chart here. Perfect, I can get that deleted here. Alrighty. Those are my annotations for my journal. All right, so weekly chart here for NASDAQ. Market's been pumped higher into that weekly gap we've been looking for here for the longest time, but then we've seen the market have difficulty getting above it, right? Because what we want to see when we're bullish is something like this here. Right, here's the fair value gap. We want to see the market get above it, support, expand, right? That's what you classically expect when the markets are bullish. And that's what we've been saying we wanted to see here for the market to get into the buy side, right? We haven't been trying to call a top. We've been looking for higher prices for the past few months or so. The draw has still been these equal highs, but what needed to happen for these equal highs to be a factor? We have to get above this weekly gap here. And by get above it, I mean close above it, use it as support, and keep rallying higher. We have not seen that, right? We've seen difficulty actually getting above it. And now more specifically, we've seen a swing high here. Who took notes on the journaling video? What does a swing high mean? And how does that give you the bias for candle number 4? Some homework for you guys. For those of you guys that already took notes, you're good to go. So what I'm watching for candle number 4 here, because we've already created a swing high, we're likely to see an expansion lower on this next candle. And given that we haven't been able to trade above this fair value gap, we create a swing high inside of a weekly fair value gap and bearish order block, which is giving me the confidence to look for lower prices. First draw, if we do sell off, like I said, we could see a crazy gap opening, so it could be very different from where that closing price is. But again, based off the current structure, on the downside, if we start to sell off, I like 50% of this weekly candle here. That's a good target. And then through that, I like this imbalance here. This imbalance here would be a good draw if we start to break down. And if we really accelerate through this down close candle here, my attention goes to that inefficiency. And then again, from there, we'll have to see what's going on. Dropping down into the daily chart, the markets have been in a bit of a consolidation here. You can really see it on the hourly chart. Let me just show you that real quick so you can see what I mean by consolidation. And for those of you guys that were live with me all this week trading together, you guys know we were talking about this the entire week. Again, we didn't say the market is untradeable, but we just said in a consolidation market profile like this, right, you want to be a lot more nimble, a lot more surgical with what you're doing, because the market's just not likely to expand directionally in a consolidation. So you have to know how to manage expectations, know how to trade a consolidation. There is a specific logic of trading consolidation if you've been taught to do that properly. So that's basically the main takeaway from what we saw last week. Consolidation profiles can be traded, but you have to be nimble in and out because the market's much more likely to reach the extreme premium, break down the extreme discount premium, and just keep gyrating between the two levels set between the defined range that we're trading in. So now going back up to the daily chart, I was fairly confident that the break from this consolidation would occur as a direct escalation to what's going on in the Middle East. So because we've been consolidating, I'm very interested to see now what direction they take us out of this consolidation. I do favor downside simply because equities or stocks are a risk asset. And when risk is elevated and there's a lot of uncertainty around what's going to happen with supply chains, if you see Iran now has already dedicated themselves to closing off one of the main passages for oil. Right, so all that uncertainty for these American businesses that use oil, that the price is going to go ballistic on crude oil, which I will touch on crude oil. I know you guys are thinking, Dylan, you nailed crude oil to the wall. You haven't touched on it yet. Don't worry, we're coming back to crude oil. We will see crude oil in triple digits and then much higher from there. Saying that to say, these American businesses and businesses in general are sensitive to all those types of things. War, inflation increasing, right? Price increases. So those are all things that are going to affect risk assets. So what you need to understand is that when uncertainty climbs in the market, we go into a risk-off environment. Risk-off means money's flowing into the US dollar and it's coming out of risk assets. Risk assets would be stocks, foreign currency, and things of that nature. So we already see Bitcoin here doing a nosedive because it's a risk asset, right? It's Bitcoin versus the US dollar, dollar second. So if dollar's going to get strength, risk assets are going to fall. So go back to NASDAQ here. We've been inside this consolidation, so I do expect we're going to break to the downside. And then what I would look for in terms of targets here. Let's see what we got. All right, so I like 50% of this wick here as a first downside draw. Let me just put that on here. So wick is a first downside draw. If we really start to accelerate through that, I like the sell side here. Let's make that red so it's consistent. Sell side here, and then sell side below this low. And then now that takes us into that large inefficiency that we were talking about on the weekly chart if we really start to sell off to the downside, which is to be expected. Last thing I want to cover, I know I did share this with you guys, so I want you guys to see kind of how this comes to life. If you'll remember, when we were inside this premium range here, what do I mean by premium? Well, when you're defining a range, the dealing range, to be more exact, there's a high and there's a low of the range here. So here we have our dealing range, premium, and discount. Right? This is the range high, range low, and here we have equilibrium. Oops. And here we have equilibrium. So when you are trading and you're looking at the market from an overbought or oversold standpoint, we don't need indicators to read that. We read it based off the price action, where we're at in relation to the ranges that have been created. When you're swing trading or position trading, we talked about those best entries would have to occur near equilibrium here or below it here. Reason being is because once we're in a premium, sure, you can still find profitability going long, but the highest probability swing trades and position trades have already been exhausted because the discount market's been traded away from. So if you remember what I told you guys for the swing traders, I said be very cautious about wanting to go long here because we're already in a premium of the range. From the range high to the range low, you don't want to buy a premium market. And it's not to say you couldn't find profitability if it went a little bit higher, but we're now likely going to do what? Reverse from this premium here. So you can see why it's never a good idea to chase price and try to buy it in a premium. One of the things that I constantly hammer to those that I'm working with is we are smart money. Smart money predicts. Retail reacts. What does that mean? Here's a perfect example. Smart money, us, we're seeing this market trade higher all the way from down here. Months ago, we're calling this thing way higher. Retail sees it higher up here, and now they want to go long on a bull flag. You see the big chasm between smart money and retail. Retail is just reacting to whatever price is doing. They're chasing it all over the place with market orders. And smart money's calm, cool, collected, sitting back, predicting price runs. So the difference in retail traders, many that come to me initially are just chasing price around. What I need to do is help you have that paradigm shift to think like a smart money trader, which is you're predicting price runs. Retail's reacting to whatever's happening. There's a big difference in those trading styles. And of course, one is much superior than the other. So saying that to say with swing trading, position trading, going long in a premium is never a great idea. Not that you can't find a little bit of profitability, but the best entries occur in a discount. And to buy a discount, you have to be able to predict the market's going to run. So again, that's that difference between smart money and retail. Again, retail reacts to whatever the market's doing. Smart money sitting back, predicting. All right, so hourly chart here, we have the downside targets. We've been consolidating in a while. I suspected the break out of this consolidation again would occur based off escalations in the Middle East, which is likely going to happen with the gap opening today. Downside targets, we already covered that on the daily chart, and we're likely going to sell off, in my opinion. So we'll see how we open on Sunday, and then that'll give me more insight going into the new week. All right, so let me see here. All right, let's go over to gold, crude oil, and then I'll take any questions that you guys may have. All right, so in a broader picture, zooming out on the gold markets, right, looking at the monthly, weekly, what are we at right now? All-time highs, right? So all-time high protocols means we continue trusting buy models until they fail. Right, so we're continuously looking for higher prices on these markets. Calling a top in a bull market is never a good idea. So we're looking for higher prices on gold, and on the back of what happened this weekend and what's likely to continue escalating, we could see gold 3,800, 4,000, 4,500, 5,000, and beyond. So gold will likely keep ripping higher, especially on the back of what's going on. We talked about dollar being a safe haven a little bit. Gold is the same thing, right? Gold has been a shiny yellow rock that has held a lot of value for hundreds of years. So if it's held value for hundreds of years, there's probably something behind that shiny yellow rock. So the shiny yellow rock is going much higher on the back of what's going on because it is a safe haven investment. Alrighty, daily chart. All right, so we're probably going to see a pretty decent gap higher on gold as well. Again, in direct response to what's going on. So I really like these equal highs here for gold. Equal highs here, and then beyond. So what I would look for in terms of targets on the upside for gold, I'd be measuring the recent protraction here, and then we look for upside targets based off this here. So I'd look for -0.5, -1, -1.5. There's other targeting methods that I have for even more precision, but this is good enough for free on YouTube for you guys to work with. So that's what I'm looking for on the upside. So now my upside targets for gold are made public. You guys know exactly what I'm looking for on the upside. So these are all the targets that I would look for on the upside for gold. Metals aren't a market I trade. They are a market I invest in now. So I'm a firm believer in investing in gold, especially in silver, right? Not investment advice for any of you guys, of course, but I firmly believe that there's a real reason to be in metals with the devaluation of the currency, the uncertainty in the currency, the US dollar that we're seeing. Those are all things that contribute to why we're seeing gold and silver prices absolutely ripping. And it's a lot of factors that are contributing to that. So higher prices for all these markets, that's what I'm looking for, and that's likely going to continue. Now for the big one here, crude oil. Let's take it all the way up to the monthly chart because you guys got to understand the logic here, right? The markets are already going to do whatever they were going to do. And then they create events to justify what the market's already going to do. Sounds crazy, sounds like shit that's straight out of a movie, but if it wasn't like this, how would I be calling this for you guys? Think about it for a second. Monthly chart, we had the market dropping down into sell side here. So look at all these equal lows, right? Look at all the sell stops that are there. What's retail seeing? Support 1, support 2, support 3, support 4. Man, we have a quadruple bottom. They need a new chapter in their books now. It's not a triple bottom, it's a quadruple bottom now. So what? That's strong support. So the market should go higher based off that. So below that support is going to be what? Sell stops. People that are bullish that have sell stops below this. When they take it down into that, those sell stops are now engaged and they flood the market with sell orders. Who would buy down here? Smart money. And what's also happening when that support is broken, retail takes a bearish stance because now strong support, their quadruple bottom, it's funny even saying that, has been broken to the downside. So now that means what? The market's really bearish now. So now it's time to go short down here. Whereas smart money is seeing crude oil is going much higher. We have a dealing range. Low, dealing range high. We're in a discount market and sell stops have been taken. So this is what? Accumulation, manipulation, distribution. But I'm giving it to you ahead of it printing in your chart. So you got to give me that, that luxury. So monthly chart here. Sell stops have been taken. That's exactly how I was able to predict 2 weeks ago that crude oil markets were going to explode. Sell stops have been taken. Crude oil is going to rip. After sell stops are taken, big explosive runs higher occur. When buy stops are taken, explosive runs to the downside occur. It's always based off liquidity. If you watch my recent video, you know all about liquidity now. And you can see how these things come into the market every single day in every asset class. So you see sell side taken, this thing's going to rip. We're at the 74s now. I was calling this to you guys all the way from the 64s. We're in the 74s, and we're going to see the market power up into the 80s and the 90s relatively quickly. And that's what I was saying about I would check on your friends that are short crude oil. Definitely check on them, make sure they're doing all right. All right, so weekly chart here. Zooming into this a little bit more. So we had this long consolidation here in crude oil. For a long time, I'm telling you guys, not really interested in it because we're in this nasty consolidation. If you remember the rules I gave you for when a market's in consolidation, it's this right here, right? When a market's consolidating, that's fine. I don't care. I'm not touching it. And then I'll wait for the market to leave that consolidation because then that'll give the cleaner price action. And that's what we're seeing right now. So they dropped it into sell side just ahead of all these events. That's pretty random. I'm sure there's nothing behind that. So they took it into sell side. And now we have all the targets I gave you here at the 80s, the 84s, 87s, and then all the way up into the 95s. So we got much more upside to go on crude oil, and that's going to be on the back of everything that we've been seeing developing. So let's drop down to the daily chart now. So once the market found support inside this balanced price range here, that gave us the green light for the upside. And then this is Monday here. So Monday, just before that, that's when I was giving you guys the call out on crude oil that we took out sell stops. This thing is about to rip. And then, of course, they float out the news headlines that justify why crude oil is going higher. Because you got to think, most people, your general population, they don't understand how these markets work. So they need a reason or an excuse for why they're about to be paying more at the gas pump. Oh, it's the war. Oh, it's this. Or this is why it moved higher because this happened when we were already looking for that. So when you understand kind of how the market works, it gives you a whole lot of clarity. Whereas most, unfortunately, are just having to always be late to the party. And in the markets, it's no fun being late to the party. So crude oil going much higher. Daily chart, absolutely bullish. We're likely going to see a strong gap higher as well. And you guys have my upside targets. And long term, I'm looking for triple digits on crude oil. So with that, guys, thanks for bearing with me. Hope that was insightful. Had quite a bit to share here to kick off the new week. A lot of shit going on. What questions do you guys have for me, guys? Let me see what we got. Hey, Kevin. Happy Sunday to you, sir. Sufyan, oil higher. Smooth edges. Oh yeah, absolutely. Yeah, those smooth edges are about to get cooked. Gold is bullish as well. Yeah, absolutely. Gold is also going to keep flying. Luca, my man, do you think we'll see these huge ranges like earlier this year? I don't miss these 300.1 minute candles at all, man. I sure hope not. I sure hope not. We'll have to see what we get going into the session, but man, if we see those 300 point, 100.1 minute candles, man, and we get back into that madness, that would not be ideal, man. I have to back my size down to 2-3 micros, man, and it's like even just trading 2-3 micros in those conditions, man, it's like you're riding a roller coaster with 3 minis. So definitely not looking forward to that, but we'll have to see. We'll have to see. And with what's going on, what I'm hoping is that the markets don't become untradeable for a short period of time. That's really the big thing, because fresh bread in the markets every single week as long as they're open. But if they're not, then that is a problem. So big thing is we at least need these markets to stay open. That's going to be the big thing. But we'll have to see in terms of the large ranges. We'll just have to see tomorrow morning. And I'll be there live with you guys tomorrow morning. So we'll be sorting it out together in there in the trenches, grinding it out. Cleo, can you share a video on your PM session trading? Ooh, that's a good one. That's a good idea. Would a PM session trading guide, a trading model for the PM session be helpful for you guys? Perfect late to the party. Saw that crypto took 2 to 3% dips, expecting gap down on indices. Gonna rewatch the live once it's done. Absolutely, that's why we make it available in case you're not able to make it live. Absolutely, covered all that, and you're on the right track. Absolutely, crypto dropping is just the precursor for what's going to happen for risk assets. So because Bitcoin's dropping, we're going to expect other risk assets, foreign currency, and stocks to drop as well. James, the shiny yellow metal had a shitty run last week. Yeah, James, I feel you, brother. That's why I don't like to trade it, man. That's why I tell you guys, I think gold is a shitty market to trade. That's my opinion, though. I know a lot of you guys, especially a lot of you guys across the pond in Middle East, Africa, a lot of you guys like to trade gold for some reason. But gold, honestly, it's not a market I like to trade. Investing in it, you can see, just zooming out, as an investor, man, you don't even care about the fluctuations. You're just riding the lightning. You're just making money, baby. That's what I like for gold. Trading it, personally, it's not a market I think is a great one to trade. So I've heard that a lot. A lot of people bitching about gold deliveries absolutely sucking, and that's that's to be expected. It's not something I like to trade. I think there's a lot better markets to trade. Can you look at platinum? Yeah. What's the futures contract? Yeah, platinum futures. Oh, there we go. Oh wow. Let's go to the monthly chart. All right. Alrighty. So we are about to see platinum. Let's see here. Yeah. Yeah. So platinum and palladium prices are probably going to be going higher in the short term. Because of everything that's going on. And if the escalation does eventually turn into the world war, which is likely going to happen, that's going to affect trade, the prices of everything. So it's reasonable that metals and things are all going higher in anticipation of that. So platinum, bullish. I'm looking for buy side here. Right now they left these relatively equal highs. That's pretty juicy. And then through that, we have this little imbalance here. So two things above the buy side, fill the rest of that imbalance. And then we even got these equal highs back here. These equal highs here, that looks like a juicy liquidity pool, and then a lot more upside on everything if things keep getting like that. I think things are going to get very expensive. I think we're going to see a lot of things going much higher in prices. Food, energy, everything, and that's going to be on the back of the world war. Great question, sir. So if you have any follow-ups with platinum, let me know, James. Sounds crazy, but all they got to do is back test and they'll see the results. Yeah, that's true. If you back test, you will see the results, but then you also have to know what to back test, right? Because if you don't know what to back test, then you're also potentially wasting your time. So it's two factors. If you don't back test, you're not going to get profitable. That is 100% true. Like if you're not digging into your charts, you're making no money. But at the same time, you also got to know what to look for in your charts, right? So that's the other little caveat there. So yes, backtesting is all you need, but you got to backtest the right shit. Silver bullet traders, what metals are you invested in? Silver and gold, baby. Silver and gold. Silver is my favorite, but I really like gold as well. They're all good. Michael, did you learn all these analytical skills in the various financial markets from ICT, meaning the core of what you do? Yes and no, right? So the technical side, 100% pure ICT. When you have something that's perfect, like ICT's concept, which is the actual source code of these markets, you don't fuck with perfection. So the actual trading that I'm doing is all ICT based. I'm not diluting it with any nonsense. No nonsense is brought into my trading, into my coaching. It's all pure ICT. No need to improve on perfection. Now, in terms of my analytical skills, risk on, risk off, understanding intermarket analysis, understanding yields, understanding geopolitical events, those are things I did not learn from ICT. So technical trading, yes, ICT 100%. But there were a lot of things I had to learn along the way before I even got to ICT. So I found ICT about 4 years ago, and I was doing this a lot longer, actually before that, with other coaches and people that were training me in other ways. Again, my trading is pure ICT, but I do incorporate a lot of insights that I've learned from a lot of different people to give you guys the understanding that I have now, right? How intermarket analysis works, how interest rates and the 10-year yield, how that affects currencies and how that affects risk on, risk off. There's a lot of things that I've learned before ICT. So hopefully you guys don't hear the dog barking. I apologize for that. But yeah, so to answer your question, ICT's, I would say 80 to 90% of what I do, but I did also take a lot of time to learn other things that give me the well-rounded perspective that you're able to see here. Great question, Michael. Sufyan, yeah, from ICT. Yeah, partially, but huge component too. Obviously, all my trading is ICT based, absolutely. So giving credit where credit is due. ICT is as good as they come. Theory, thanks so much, appreciated. Yeah, my pleasure, my man. Taps, happy Sunday. Have a question on risk management? Yeah, man, fire away. What's going on? All right, say you have a 50K, 2,500 trailing drawdown. How much would I risk? Great question. I always get that question. That's why I'm laughing. Not because I think it's a funny question. I will never tell anybody what to risk. It depends on a lot of factors, and the number one factor being what's your experience level. Prop firms are something that make trading much more difficult than it needs to be. Because if you're trading a live account with, let's say, $10,000, there's not all the silly rules and restrictions that hold you back like these other funded accounts do. So it makes actually trading a lot more difficult. So the way you actually beat the prop firm game, because what they're betting on everybody doing is showing up, over leveraging the shit out of those accounts, trading minis, trading 5, 10 micros, and blowing them in like 3 to 5 trades. So if you fall into their trap and do that, then you're going to stay in the cycle of resetting accounts and donating to Apex or Top Step or whatever company every single month. And I don't want that for you guys. So the way to actually break out of that is to risk a little. I would recommend, I mean, this is not financial advice, 2 to 3 micros to start. And then what I teach with those that work with me is everything needs to be accounted for in your trading, right? It's like when you're scaling and you're growing an account, you need to have a plan for scaling, because you're thinking, or someone may be thinking, well, 3 micros. I mean, what am I going to do with that? How does that make money? Well, with 3 micros, if you build it up to $1,000, and you should be able to make $1,000 with 3 micros pretty easily. And then for every $1,000 of equity you make, you add on 1 micro. So you make 1,000, now you're doing 4 micros. You add on another 1,000, now you're doing 5. Another 1,000, 6, 7, and so on. And then you can see how you can really, in a short amount of time, grow to trading 1 mini to 2 minis, but have enough in your account to not be over leveraged. So this is an entire masterclass in and of itself that I've already done for those I work with, but I want to help you out here since you're asking. So why am I bringing all that up? Because what I recommend in prop firms is starting them small, building them up, then scaling as you do that. Because if not, you're going to keep falling in the trap, like unfortunately 90% of you guys are, of blowing accounts and making your monthly donations to these funded companies. Stop doing that. Keep your risk low, grow the account with a real skill set. That's the key, right? And unfortunately, I feel like a lot of people are in that cycle of boom bust because they treat it like the lottery, right? Oh, I reset my account. Let's get a payout next month and let's just over leverage it and win the lottery. And what happens to people that play the lottery? They're broke as shit. Don't play the lottery. Do it the right way. Build the skill set. I would recommend starting small and growing it little by little. Good question, sir. Yeah. But like I said, though, it depends on skill level. So if I have someone that's working with me, like an analyst, like my man Tommy, for example, we'll just run up funded accounts, right? So like we'll trade minis because at the end of the day, it's all about return on investment at that point. So if I can invest $500, but we're taking 2 to 3 payouts, that's good business. So it depends on a lot of factors. But would I recommend someone that's a new trader try to trade like that? Absolutely not, because it's just going to be suicide and you're just going to build bad habits. So a lot of things that have to be considered, and that's usually why it's good to get some solid coaching so you understand kind of what you should do and why you should do it. But hopefully that's enough to get you started, my man. Amy, what are your targets for silver? Yeah, let's take a look at silver. A lot of industrial demand for silver, considering AI and all the things that are going to be needed to power these computers and these hardwares. And a lot of that's going to be with silver. All right, so what I'm watching here for silver, as long as we remain above this bullish fair value gap here, I want to see us keep trading higher. We should not get through this bullish breaker here. So this bullish breaker here, this highest up close candle, extend that through. We should not violate this candle here. So this range here should be a bullish breaker. I actually want to see part of this gap left open as well. So I want to see part of this weekly gap left open, treat it as a breakaway gap. I want to see this breaker support price. And then what we'll do from here. All right, so I like the 38.67s, 41s, and we'll take it from there. One of the things that helped me confirm my targets is as I'm watching the candles print, I want to see confirmations, right? So if we leave some of this gap open here and treat it like a breakaway, like I'm suspecting, because there's a breaker there, then that would give me confidence that we're going to see a lot of speed to these targets that I'm seeing there. But if we fill the gap all the way and we don't give bullish signatures of reading institutional order flow, and that's why reading institutional order flow is so important. Like without it, all these things are going to crumble underneath you. So you have to know how to read institutional order flow. Maybe that'd be a good video to do for you guys. So what I'm watching candle by candle is how the institutional order flow is printing, and is it confirming or invalidating what I'm looking for. So just because I'm putting all these targets on here, don't think Dylan's calling for gold to go to $54 an ounce tomorrow. I still have to read institutional order flow. I still have to watch it candle by candle, and as long as it confirms what I want to see, which is what I'm tipping my hand to you guys, what I want to see here, I will continue to look for higher prices, and these would be the targets I would work with, measuring that breaker price like there on the upside. Great question, Amy. Eslam, so are you looking for lower prices on NASDAQ? Yeah, I already covered that, sir. Absolutely. When it comes to COR, I'm not sure what you're saying, my man. When it comes to COR, bad AM session, or missing. Yeah. Okay, but the PM session is going to be helpful. Awesome, man. Yeah, that's good. I'm looking forward to sharing that. Okay, so when it comes for the bad AM session or missing the price run, PM insight is going to be helpful. Absolutely, yeah, it's definitely helpful to be versatile and understand how to trade different times of the day. When you first start, it's of my opinion that you're better off specializing in one session, getting good at one thing. But over time, as you expand your skill sets, trading all sessions is definitely something that's a worthwhile endeavor. It definitely gives you a lot more options. From a technical aspect, ICT will give you a great foundation. Yeah, no doubt. Absolutely. The best foundation, in my opinion. Absolutely. Sufyan, can you explain commitment of traders and give me some examples on NQ or ES? Thank you. Yeah. As much as I'd love to just, yeah, here's what I do for COT and lay it out for you. I've done hour-long lectures on commitment of traders and how to actually read all that information, understand the commercial hedging program, how to determine if the commercials are net bullish or bearish. And that's a very detailed study that would take me a long time to cover here. So as much as I don't want to deny you the answer, it would just take me way too long to explain commitment of traders. This is what mentorship is for, of course, to me, to teach you everything. Dylan, can you, are you still doing calls? Yes, I am. Yeah, you can book in the description below. I believe in the description. It's definitely on the previous, most recent video I did in the description. You should be able to book, but you can also book inside the free Discord as well. So in the free Discord, you can also book a call if you'd like to speak with me and you're interested in leveling up your trading. Alrighty, guys. See the questions starting to wind down. Is that it for me here before we get going? Silver Bullet Trader PM session will help me a lot due to the 9 to 5 grind. All right, I feel you. I feel you. I understand. Yeah, sounds good. I know many of you guys are on the 9 to 5 grind, running businesses, university, wherever the case may be, and I'm interested in. I'm actually looking forward to sharing how to trade those different times of the day. The actually really cool thing is, for those of you guys that need something right now, take 9:30. Right, what I taught to use and look for at 9:30. And apply that to 1:30 and watch the clarity open up. Speak with you guys on the next one. Stay safe. Things may get crazy in the US. Not trying to fearmonger. Want you guys to be prepared. Things could pick up, not only in the Middle East and other parts of the world, but also in the US as well. So I want you guys to be safe, be mindful of things that are going on, and do not let your guard down. Never been a more important time to learn how to trade because shit is likely going to get hectic, folks. I want you guys to also stay safe, take care, and I will see you guys on the next one. Have a great weekend, everyone. See you guys long. Amy, thank you.